Hello, this is Dave, and welcome to Equities Story. And look, Wolf, I got Melbourne behind me.
That's really strange.
Yeah, I know.
Swapping towns now?
Well, they had the earthquake.
Oh,
yes.
yes.
And I sort of looked and I thought they said earthquake in Melbourne. It showed that picture. Now, the earthquake didn't do much damage, did it?
No, but it was actually shaky. I saw some of the footage. It was shaky.
Yeah.
I do remember being in a earthquake when I first came to Australia back in '82. There was an earthquake in Melbourne. I remember things shaking. So I thought, oh, that's interesting.
Well, I'll tell you what, I was in an earthquake in Mittagong. Can you believe it? I don't know if anyone remember back in, was it 2004?
Yeah.
And you can't believe it. It's a one night. We managed to get all the kids off to the grandparents. Yeah. And I put the movie on. I got a lovely glass of red wine for the wifey, put it on the table. I looked at her, and then the whole house started shaking. And I thought it was her at the moment. She was doing it to me again, but it wasn't. It was an actual earthquake. And then guess what? I had to spend the whole night. She thought the house was going to fall down. So I spent the whole night in the freezing cold Mittagong, having to walk around the house with a torch, making sure the house wasn't going to fall down.
Oh, God.
That was my one night without kids in 27 years. I had an earthquake.
I think it's like a sign from God.
I think it's a sign from God. Yeah, 5 kids is enough for you, mate. All right, this is just general share advice and not personal advice.
Anyway, I think we're fairly safe here in Australia with earthquakes, I think.
All right, don't say that, Wolf. Don't say that. That's what they said in. They've said that in other places. The next thing you know, bang, it's all gone.
Okay.
Okay, let's go through some announcements today. HPI. Go on, tell us.
Sorry, with HPI, whoever's got it as a dividend stock, because I think it pays. Let's just have a quick look. Pays not a bad dividends, and it's a fairly. When you look at hotels, pubs, and clubs, right? It seems to be a fairly resilient space to be in. Even in an economic downturn, people will go out and have a drink at a pub. Dividend yield of 5.6, PE of 8, slight little upgrade today, Dave. So look, if I'm in this for that reason, it's a hold. All
right, absolutely brilliant. Okay, and the charts are holding up absolutely fine. Wolf, IEL, right, which broke the trend, and we were going, oh my gosh, what's going on here? Talk about the insider selling.
Yeah, but this is the interesting lesson for not just me, but for everyone else out there. I had to reread everything, all my thesis about IEL. I had to do a bit of studies about why it's going down, who's selling, why it's being sold down. It took me 2 or 3 weeks to sort of come to terms with it, that it's actually under the trend line. I'm thinking, what's the reasons for that? I just could not, but then I thought, okay, there's something I don't know here, so I just got to get out. Thank God I did, because obviously there was something in there that came to light 4 weeks later, right? And what it is that one of its markets, that's Canada, has announced, the Canadian government's announced that they're going to open up the actual market to other players, pretty much their competitors, right? So they had exclusivity there. They're going to open it up for the English tests, and possibly it's going to affect IEL. How it's going to affect it, probably long term, we don't know yet. Short term, I think the company's come out and said, hey, okay, well, Canada has announced this, but it's immaterial to us at the moment. So look, obviously IEL's sort of being on the defensive, saying it's not going to be too big of an issue for them right now, but long term, you just never know. When that sort of happens, you think, okay, what are the other countries that's maybe the same type of thing? So I think there's more questions here than answers. So you can understand why the market's so panicky and go and sell. And it's because it's expensive as well at the same time. So down she goes, Dave, and you probably have to stay out at the moment out of it.
Well, yeah, and you're trading at 45 times, right? So you're not cheap.
Any questions like that, right, that might affect your business model, you definitely have to get out.
Right. ODA, more of a micro cap here. We know these stories are up and down like yo-yos. This used to be the old Smart Trans Holdings, correct?
I can't remember the actual old name of it, but it's been in the doldrums for a long time, right? And recently, it looks like they've reinvented themselves, right? and they've got a number of contracts coming through. So that's a technology company for transport logistics.
Yeah.
I had to read through it. I'm thinking, okay, it sounds interesting, but we've seen a dime a dozen of these sort of companies. What I want to see is give it a bit of time. I want to see, positive cash flows. I want to see some continuity and some probably time lapsed where I can see that it's just not a one-off type stuff, right? So yeah, looks good. And for a trade, high risk trade, you can possibly play it. It's not too expensive, maybe at 50 million market cap, right? But for me, fundamentally, it's probably too early.
Right. Okay. And that's a management contract with Northline, correct?
Yep.
Wesfarmers. So struggling to stay above trend. Is it?
Yeah, look, I think it's confession time today, right? So they had a presentation today saying, okay, we've definitely noticed that people are basically closing their wallets, right? Which is, from Wesfarmers, you have to take notice of that. This is huge news, right? And that's why you see the retailers going down and everything else. When Wesfarmers comes and says the dynamics are changing and people are now looking for value, and they obviously turn around the whole thing, the narrative saying that, yeah, but we are a value type company. We do have the best price points for a lot of the things they've got, which is true, right? Out of the thing, and they are very diversified. But when Wesfarmers comes in and says, this is what's happening, we've got to, cut costs and all those sort of things, you can see why the share price is like this. And you're probably thinking to yourself, it's maybe time just to be on the sidelines for a little while. I still love Wesfarmers long term, don't get me wrong. But you just think maybe they're setting themselves up for a softer reporting period in August. So for me, I'm probably out. And the other thing they've done today is pull out of that Silk acquisition that they talked about month back. So that's canned as well.
Obviously, believing they can buy it a lot cheaper in the future.
Yeah, potentially. Or they are really reining their spending and saying we're not going to overpay for something that you can probably do.
So Wesfarmers is a sell, right?
Yeah, I think so. I think sell, just probably stick on the sidelines for the moment. The only case you can make for it is if you're in this for a dividend, right? Put it on a long-term monthly for me, Dave, please. And if you're in this for the dividend on a long-term 5.5%, I'm still okay with it. For the long-term dividend holders out there.
All right. Now Drone Shield. They're sort of holding trend, Wolfie. You feel like they could have actually traded a little bit better than this. They've
Yeah, look, I'm fascinated by this story, really. I have to say, because obviously we've got this Ukraine-Russia war, and the guy in charge of Drone Shield is a Russian, right? Oleg Vornik. So I had to read about him, right? I just wanted to find out where his sort of allegiances lie, where is he coming from. So his little spiel says that he fled from Russia when he was young. He's an Australian American citizen. He's obviously, had to take sides, and he's definitely on your Ukrainian side. The Russians put sanctions on him, right? So he's, I think, his heart is in the right place, right? And he's supporting probably the right cause. And he obviously talks up the technology. Today's announcement was just basically that they are ramping up production of the anti-drone weaponry or systems. And a lot of that sales are going to Ukraine. So that's quite interesting how it actually works. And he basically said that it is actually quite effective against the Russian drone. So potentially, this could be still a decent story to play if it starts bouncing again off the trend line.
And their drones are drones that knock the other drones out of the skies, correct?
Yeah, so they've got the anti-drone technology. So they've got like sort of almost like laser type guns.
Yeah.
I don't know, wave technology or something that shoot, that sort of disables the drones out there that are menacing the skies.
Yeah, there's a risk there, though, isn't it? That sort of works until they work out how to stop them from doing it. I mean,
yeah, but this is like almost like a technology gameplay, isn't it? So the Russians will be trying to work out how to bypass the technology. Then they're working on how to avert that Russian technology, and it's a cat and mouse, changing the game, so to speak. And I think he said in one of the presentations that I just had a read through, or I actually listened to, saying that we got to constantly update our software because of that problem, right? Where things are almost not at shooting down the drones, but actually technology trying to catch up to each other, which is quite interesting.
And it can only ever really be a trending story. And if you are trending it, you can hold it below 26, you sell it.
Yep.
And it could be a buy if it jumps back over 29.
Exactly. But it's an interesting little story, right? So you can play it sometimes when it comes up with some interesting contract wins, right?
Sure. Qantas.
Mm-hmm. Look, again, so another one of those big companies today that's came up with a presentation. Same old what we've seen previously. Things are going very, very well. People like yourself, Dave, are paying 10 times what they should be paying for the tickets. But you've got no alternatives,
No.
so you just got to go. So they are doing quite well for themselves for the moment, and I think they probably, what I'd probably say, and there's a term for this, is over earning right now in this space, and they'll probably catch up with them one day where they're not going to be able to charge $3,000 for a ticket to Europe.
I don't think it's going to be too far, because like you said, things are starting to ease off. Spending slowing down. Exactly. And what you would imagine, that spending, it's hit the retail, it's going to start hitting the travel, correct?
Well, you'd think so, because the first thing that goes is the luxurious spending, right? The things that you don't have to spend on. So the luxury items, that may be the expensive items. The next thing that goes is there may be the stuff that you can put away for 12 to 24 months, and that's travel maybe, right? And then the staple stuff you have to buy, but then you're probably looking for value in that staple stuff. So I think that's a sort of cascade effect on that. So potentially Qantas and other travel to leisure companies may be turned to come shortly.
All right.
So just watch it, watch the charts, really.
LIC, below trend line.
Got to get out. It wasn't a great update today, Dave. I think basically struggling. There's no growth at the moment in there. I think the real estate market for them, especially, is very flat. So for me, I would not be in there.
Big sell. ALC, again, it's been a sell. It's
been a sell a long time. We had to get out of it. Obviously, even under 10 cents was the last, the last scraping of the barrel. We just had to pull the pin. It's just slightly above 10 cents. All they did today was just announced a couple of contract extensions. So there's nothing new in there, just extensions, which you'd expect them to come up with, right? You don't want them to say, the contract's ended. You want them to extend their contracts into perpetuity. So in that sort of sense, all good and well, but nothing new in there. So for me, still definitely not back into that.
TSK. Trending.
Different story. And look, you're probably going to like the chart here, and so do I, Dave. Interesting. For the first time, I've actually had a look at it. Just let me have a look at what the market cap is like on this, and it's a turnaround story. As you can see on that thing, I think they had a 100% increase in revenues, from a negative 20 million loss to a just positive NPAT this year. So a huge turnaround. So that's a technology solutions group, actually going to be relisted here in Australia as well, because it's a New Zealand company, 198 million market cap. Look, it doesn't look too bad, but again, it's probably too early for me. I just need to do a bit more work on this, whether it's got legs in it or it's just one of those moments in the sun for 3 months.
Okay. It's having a good move. And IGL, Wolf, you want to mention this because there's an interesting Val. I mean, this is really a dividend play, right?
Yeah, for some it's a dividend play for sure. For some traders out there, obviously you had to get out if you went below that blue line on your.
As a dividend play, you're holding. It's holding.
Yeah, it's a dividend play you're holding. As a trader, you're out. And interesting enough, Shaw and Partners come out saying that this is worth $3.20, I think. So you can see there's a huge upside to their valuation. So they're very bullish. In other words, for me, again, I want to see an update of some kind. I'm always nervous when things lose their momentum, right? And you think to yourself, why? Is there a reason for that? And with IEL, I'm thinking, what was that all about? And you're not going to find out probably for 2 or 3 weeks. So I'd rather be safe than sorry.
All right, Wolf, just lastly but not least, we're seeing the big move with obviously NXT and these sort of I mean, looks great, that chart. And T&E. Sort of last cab off the ranks is this OCL.
Yeah.
That sorry, that's a monthly. God, that looks good on a monthly, doesn't it? Right.
Oh.
Hello. But we're
We've got
talking
last
about
day of the month today, isn't it?
what?
We've got the last day of the month close.
Yeah, I know. I mean, hang on a second. That was a bit of an accident. I mean, why wouldn't you buy that on a monthly? I mean, it's not quite a buy. Well, it's not quite a buy signal, but nice looking chart, and maybe that's the support we talked about. It wasn't about 13 on the monthly, but the weekly, right? This is because it's sort of break up. That's a little bit early, but I'll tell you what, if this looks like this Friday, this could be the one, right?
Yeah, I agree. I mean, remember, at the end of the day, it's still an extremely quality story, right? It had a misstep. It was caught up in that tech sell-off, right? Because it was trading on about 100 times PE. So the timing of its downgrade was just terrible, right? It just perpetuated the falls for it from those $21. But potentially, that was it. That was that year that they had to have of every company has got that year of, just a bit of troubles. So maybe that's absolutely right. This could be the time. And you're not picking out of cheap. Yeah, let's have a look at what it's trading at the moment. But
about 60 times.
But traditionally, some stories you'll never pick it up at 20 times, right? You just got to bite the bullet and say, this is a quarterly story. Long term, it's a compounder, and it has been for a long time, Dave. Big funds love compounders out there, T&Es of the world, OCLs of the world, and they will have their moments of 1 year or whatever underperformance, which they have. It just gives you an opportunity to buy. And I think a lot of those big funds that they've got the long-term outlook, they've always had that view on buy quality companies at good, decent prices. And I think, this is it, like you said.
Yes. And if you look at Technology One trading at 54 times, how would you compare the growth between the two companies?
I think it's very similar, actually. It's a very good question, and I think it's very similar. Very different companies, mind you, right? Still both fairly software tech oriented, very different, but the founders are still there, and both are very quality to me. There's really not much capital raisings in there. It's just all funded through growth, cash flows, and have been very, very good performers. So if I was building a portfolio, I'd probably have T&E and OCL in there somewhere.
Yeah. The total revenue was up 22%, which the profit after tax.
Yeah, which is very similar to what T&E came up with.
Very good. All right. Listen, on your watch list at OCL, if we can maybe get a bit better price action.
I think just wait till Thursday or Friday, and then we'll probably pounce if it's like this.
Yeah, definitely. All right, Wolfie, absolutely brilliant. Now tonight we've got Ask the Analyst live. Look forward to seeing everyone there. Ask your questions, and we'll give you the buy, hold, and sells of every stock.
Yeah, exactly. Every stock on the ASX. A long night ahead of us.
Yeah. Really, it's incredible service. So Ask the Analyst live. If you haven't joined us before, join us, because I think it's the best part of what the service that we deliver here at Equity Story. On that note, Wolfie, thank you very much.
Thank you. Thanks, guys.
Thanks, mate. Bye.